You're listening to the Generational Wealth Through Commercial Real Estate podcast. Your host, Will Smith, is a former NFL player that found his passion in commercial real estate. Every week, you will learn from industry experts everything you need to know to get started investing in commercial real estate to build generational wealth.
Thank you for tuning in to the Generational Wealth Through Commercial Real Estate show. Got a very special guest lined up for you today. But before we get into it, if you're watching this for the first time or listening, go ahead and hit the subscribe button. This is how I keep putting out great content and bringing on awesome guests like I have today. And if you haven't left me a review, leave me an honest review. Tell me if you like the show, whether it's trash, what you would like to hear on the show. If I'm not putting it up there, just let me know. I want to keep bringing on rockstar guests, and I want to keep adding value to you, my listeners. But let's go ahead and get into today's guest. Abel Pacheco began his real estate investing in 2008 and has invested in over $93 million worth of commercial multifamily real estate. That's 865 doors across 5 apartment communities. He is a passive investor and also a general partner on half and half of that portfolio. He also has 20 years of corporate and entrepreneurial experience as an executive IT sales leader. He achieved 10x growth from $5 million to $57 million as an acquisition sales guy. So, Abel, man, we appreciate you coming on the show. I know you're about to add a ton of value, man. Tell us who you are, man. That was a short bio.
Yeah, thank you very much for having me on, too. I appreciate it. And I know it takes a lot, Willie, to really give back, do these podcasts. So, man, it creates a lot of value for your listeners. And, that's awesome, man. So my name is Abel Pacheco. I'm the president of 5 Talents Commercial Real Estate. I grew up in Corpus Christi, Texas. Spent 18 of my years there, moved to San Antonio, Texas, where I live today with my wife and 2 children. And I started in, single family investing while I had a full-time W-2 career. So I've always been in sales, salesman, sales leader, executive sales leader, et cetera. And I spent about 13 years in IT hosting. So I sold business to business sales, internet services. Basically, we were the plumbing for the internet, if you would.
Yeah.
And so we did that for a number of years. All through the while I was investing in real estate, and we went. I think you read off one of the bio points. We had a nice run, a 10x run from $5 million to $57 million. So a lot of growth, a lot of success, and we realized that the W-2 job would eventually. If I stopped working, it would stop producing income. So we were always investing in real estate, me and my wife, since 2008. So we've been real estate investors for 12 years. And just recently, in the past few years, have transitioned to commercial real estate. And so now we're still investing passively. The long-term hard goal is to be full-time passive investors. I think that's key for us.
Right.
But from now till then, we realized, man, we can earn way more. We can learn more about markets, how to create income, create the wealth, create net worth from our multifamily investments.
Yep. And
me and my wife have just said, well, we should go lead and sponsor deals. And so we're active now in those 400 something doors, a couple of apartment complexes. We have a project a long project that we're undertaking, new build, new construction as well. And then we have under contract a couple of deals as well right now. So we're excited. Nice. And, that's a little bit about me. I would say also for the, personal note, big on faith. I've accomplished a lot in the professional world, entrepreneurship world, and now real estate investing. And for me, it's like, man, the Lord has blessed me beyond my means and beyond my measure. And just without him, none of this would really be possible. So try to take that approach to like having faith, working hard, persevering, determination, and then, be a good steward now of other people's capital, because we do have passive investors that are looking for, deals to invest in.
Yep.
And so we aim to be that financial steward, help others, create additional wealth and cash flow for their investments now too. So that's kind of me in a short minute or two here.
No, that's awesome, man. Appreciate you sharing that. So you had a great W-2 job and you're making, pretty good money, but for some reason you kind of always had the thought of, I want to be making money outside of what I'm actually doing, or my W-2 job, my main hustle. Why was it real estate? I mean, there's a lot of different, things you could have put money into. Why did you choose real estate?
And it was originally the only vehicle that I knew of, and I think kind of still today, that I could invest in. I could put my money, the time, effort, and energy that took me to create what we deem as active capital. That was my work, my hours, my wife's also. And it took us 50 hours a week. We'd come with a check. That was the active capital. It was the only place that I knew that I could put my active capital to work that would create wealth and cash flow passively. Right. Passively meaning, man, when I'm sleeping and we're at home in bed and I'm not literally working, then the property itself can still create additional wealth, additional cash flow, and appreciate over time, provide me tax benefits, provide me that net worth creation, unlike, any other asset or investment vehicle I knew of then and still know of today. And that's why, real estate, it was hard look at all of the effort, energies. We talked about $57 million in acquisitions. Wow. That was like 60 people all driving on a mission, on a tear, to get a lot of news cycles, outbound calls, phone calls, just so much activity. Yeah. And while it was amazing building that team and having fun with my team, all the salespeople had a lot of success. We had a lot of fun. We have this bell on the floor and everyone, right. There's a lot of excitement. Our office was in the middle of this like gigantic renovated mall. So we were like loud, raucous. It was, I mean, people would say like, dude, what are y'all having a riot? And we're like, no, we just closed like this $100,000 monthly recurring deal. But all of that, the moment it stops, the moment you either exit the company, the company, changes leadership, or you're no longer there, whatever the situation there's nothing left for you as an individual. And so that's what drove us to, real estate was, how to create passive cash flow when you're not working.
Right. No, that makes a lot of sense. And I think most people, they eventually get to that point. Some people it's right away because they're constantly educating themselves, listening to podcasts like this one. And, others is towards the end of their career and they realize, dang, I need to find a way to make some more money outside of me working, so it's great that you figured that out so soon. Yeah. So you got into the real estate side of it. What made you choose residential real estate, multifamily real estate, instead of say retail or self-storage or something like that?
Like multifamily? Is that multifamily residential? Well, it basically came down to the basic need, right? It is people need to eat, they need shelter, they need food, water, shelter, clothing, and they're like, well, they need they need a place to put their head down. Right. And so that basic need was, one that I thought, well, everybody needs it. Everybody has to, go to sleep somewhere. And we don't, typically invest in like luxury apartment complexes or luxury housing either. So it's kind of that, workforce, median income type of housing, which is just in so high demand right now in the US. Yeah. And, that's kind of how it came down to it. We thought, we did look a little bit at, commercial buildings, like office buildings. I'm glad we kind of didn't pull that trigger. Yeah. I was always a little scared of like hotels and tourism cities. And then from a retail strip, I just never had that interest to say, oh, I want to own a retail mall. but it was when we definitely went to commercial real estate, it was multifamily all the time. It was always the residential side of commercial because of the easy, I guess, shift in our paradigms, because we were already investing in single family homes for that 10 years. And this is me and my wife. So it made a lot of sense. You know, we saw if I invested $150,000 in a house, my mortgage, you know, was, I don't know, $900, and we'd rent it for 13. So we got the cash flow positive from every new renter in those houses. So it was really trying to get to like 10, 20, 30 houses that led us to commercial multifamily, because we realized we could buy one deal and have that many doors cash flowing net positively. And so that's really why multifamily, as opposed to one of the other asset classes.
No, you know, that's a great answer. And I want to ask you a question, because there's people listening to the show right now that are buying single family townhomes or whatever it may be, and they think that multifamily isn't an option, or, you know, you got to be super wealthy to buy multifamily. Could you talk on that for a moment of why, you know, they should consider multifamily now instead of waiting later?
Yeah. I'm actually writing my first ebook on this. So your listeners can probably go to my website and download an ebook there. And I'm writing down my notes and my thoughts, and, you know, kind of over the last 12 years, it was a few things that kept me from doing multifamily first that I think it's worth, you know, sharing, which is I had a limiting belief when I bought my first property. This was 26. I bought my first property. I had $5,000 cash in my hand, and I was renting a house. So I said, I should buy a house. At the same time, I read two books, and it was the purple and yellow Rich Dad, Poor Dad's, you know, book, the original one. And then I read a follow-up book, and that follow-up book was Ken McElroy's The ABCs of Real Estate Investing. And it, you know, as the title suggests, I was thinking they were going to show me how to buy a single family house. ABCs. Oh yeah. Buy a simple house. Right. But they were talking about buying commercial real estate, specifically multifamily apartments. And at 26 with $5,000 in the bank, I told myself, Abel, there's absolutely no way you can invest in apartment complexes. Even though the book says it's easier to get a loan, it stands on its own. And the multifamily, you can raise capital. If you find a good deal, other people will come with you. Even though it tells you all of those mechanics, the limiting belief said, there's no way you can do this. Go spend the $5,000 and buy a single family house. And I did that for 10 years because the limiting belief that I had about myself was you're not savvy enough. You're not wealthy enough. You can't do this on your own. And, you know, now I feel, that was fear. And, you know, for me, that's not of God. He doesn't put those things in my mindset. So I have to realize, hey, that's somewhere else. You can't believe those things. You got to move forward and push forward to what you really want to do, what your real goal is. So that was the main, you know, kind of, item or lesson that I'm starting to realize. Now I'm 41, right? I got a little bit of age to me. And now that I have dealt with bigger numbers, we did have those $1 million sales. Those companies trusted us to, you know, exchange millions of dollars for internet IT hosting services. The commas and the zeros, they kind of got, you know, it got more comfortable. It was easier for my mind to wrap, or for me to wrap my mind around the fact that other people would exchange millions of dollars for the services. And so now, as I'm older, I realize, okay, I've had number of transactions. I have dealt with that. There's no difference between what I was doing in the professional world to what I'm doing in the commercial world. So a lot of that same, you know, thing transitioned. And, you know, I would say if you have a thought, an inkling, a dream, a desire to go invest in, you know, commercial multifamily, and, you know, it's really what you want to do, don't wait. Additionally, in 2008, if you can rewind, there was no podcast. There was
Yeah.
no, social networking.
Right.
There wasn't the ease of which you can create new relationships with new people, whether it be investors, other partners, other educational sources like this podcast.
Yeah.
There wasn't those avenues. Now there is today. There, you can absolutely get that information. You can understand what other people are doing, and you don't have to wait. You don't have to spend 10 years, in single family. If you want to do a few deals, that's okay. Go do that, but don't wait. Don't spend 8 or 9 or 10 years doing 100 homes before you think you have to jump to multifamily.
Right. No, that's those were all some very good points, and I feel like the biggest point was your faith. Some people know, some people don't know. I'm a Christian, and it's our faith that opens up the doors to new possibilities, and all it is believing that it's possible. It's possible for you to go out and buy multifamily. It doesn't have to be, a house. You can go buy 30, 100, 200 units. It's all about relationships. And this business, Abel will tell you the same thing. If you just get out there and network, there's always somebody out there looking for deals. There's always somebody out there looking for capital. There's always somebody with capital looking for somewhere to deploy. I mean, the opportunities are limitless. You just got to put yourself out there. Wouldn't you agree, Abel?
Yeah, 100%. And I'm blessed that, we reached out. I think I talked to you about a year ago, and, prior to that, I think it would be, it would have been a little awkward for me to reach out to somebody about investments, dollars. I did it in the professional world. There's really no difference, because I reached out to somebody I didn't know, try to sell them services. But I felt, because I had an identity as a salesperson, and that was my professional career, that it was okay to do it that way, but it was not okay to ask for like help or information about, investing or creating net worth or creating, multi-millions of dollars. And now I realize, well, there's actually no difference.
Yep.
And if you could overcome that, man, you can reach out to somebody, and there's always somebody willing to share, help, invest, partner.
Right.
One of the ways that you mentioned. So get after it, reach out.
Absolutely. So let's talk about how you're finding your deals. I mean, obviously, people, we got people believing that, hey, okay, I want to do a deal now. So let's tell them how are you finding your deals?
I would say, the primary source for us is broker relationships.
Yeah.
Right. And to be, transparent and kind of show people, you don't have to be like an expert to find your first deals. We're in 3 deals that are moving, and 2 others under contract. Right.
Yeah.
And, I'm relatively new, active general partner. It's been a couple years since I've converted, and really the relationships with brokers, I think a lot of times you'll experience, if you're not a pro in your market, if you're not the guy that's done 10, 12, 15 deals, you're probably not going to get that unlisted, fresh, off-market kind of property from a broker. You may see it on CBRE, or you may see it on, JLL. You may see it on those emails that go out. But you have to realize, man, that thing's been sent out to a bunch of people, and it's probably not a very attractive deal, and that's why it's been marketed. So how do you do that? Well, the way I did it was I partnered with somebody that already was in that deal flow, somebody that already had multiple transactions, and they had a great reputation in their market. And I provided as much value as I could to that new partner, or that partner being the new guy coming in. Right. And the more value that I provided, whether it was consciously, subconsciously, whether it was, this guy's doing me a favor, I got to do one back to him. I was invited to be on my first deal as a co-sponsor. Right. Yep. And, my first deal as an active, member, I didn't feel comfortable taking down a, $7 or $10, $15 million deal on my own.
Yeah.
I was going to raise capital from investors, and I wanted their money to be safe.
Yeah.
And the last thing that I was going to try to do is like be a hero and do it on my own when I know enough to know I don't know everything. So
Right.
Instead I partnered with somebody that was already in deal flow. They had a great, like I said, broker relationship. They've had experience, full cycle deals. And so what we did was we provided a lot of value. I co-hosted a meetup. I brought investors to this general partner. I invested with them passively.
Yeah.
I let them know my goal and my intention was to be a general partner, an active member. I want to be a syndicator. I want to be a sponsor, operator, whatever you call it.
Yeah.
So if I invest with you, can I learn through my investment as a passive investor?
Yeah.
And the answer was yes. Right. So yeah, I'll share with you. You'll have the, it wasn't like, some people ask me today, well, can I get involved and do the underwriting and go do the tours and really get my hands dirty? And I think back to the first time that I was involved, and I really didn't do any of that as a passive investor, but I did get the P&Ls. I did get the monthly reports. I did get the quarterly reports, and I did follow. And I looked at the business plan. I understood. I did go drive by the property. I was local to my investment. So I guess that's a benefit to being, there, but I get to see the improvements, see the strategy. And that is what helps me today be a smarter, more educated, wiser investor. And now I'm at the point where I think I can probably handle a couple of, the broker relationships, right? I started 2 or 3 myself. We reach out to a few other people that maybe still don't consider me or still don't reach out to me today, but you keep reaching out to the certain, 5 or 10 group of people, give them an update, try to introduce a new investor to them. Yep. And that broker relationship will eventually bloom. And, and then finally now I'm just starting to have people, hey, I've got this deal. I got this deal. I thought of you first. I don't know if I was their 5th call or 10th call, but I got a call. And so I think that's that's a good experience, and it doesn't happen overnight. But if you continue to, to feed into those broker relationships, I think it is valuable. And one more nugget I did have, which was shocking to me. I had a broker relationship, a brand new one that I opened up, and he asked me about my experience. I told him, this is what I do, this is how I do it. He knew my partner, and, I think that helped in the initial conversation, but he asked me what I was looking for. I told him quickly, and I turned, the phone around, the conversation around to the other end. And I said, hey, before I tell you, too much about me, we only have a few minutes. I'd really like to know what your goals are.
Yeah.
Do you want to be a multifamily investor also? Do you just enjoy earning commissions, on these deals? Are you looking to do X amount of properties this year? What target market are, you sourcing deals in? And in the sales career, I always prided had a lot of pride in my process. I was never selling to somebody. Yeah. I was creating a new relationship, building a friendship. If I learned enough about them, I could then serve them better, and they would naturally want to buy as opposed to being sold. Right. And so I took that same mindset into well, what is it that you want, man? And he told me, I know I have aspirations to be a multifamily investor. And so that, that triggered something. I was like, man, if you need help, if you need education, if you need, and this is an individual that, that they're around properties every single day, but they haven't gotten their card punched. So how can I help them? And while there's been nothing that's, popped up just, from that call, it's just a month ago or whatever, but I know that I'll keep feeding into that. I'll keep nurturing into that. And I'm sure at some point it's going to say, it'll bloom. Hey, I got this deal. I thought about you. And, there we go.
No, that's really, really good advice. I hope your listeners heard that. So number one, reach out to them, partner. Well, number one, you got to partner with somebody in the market that has the experience, because that's the only way they're going to take you serious. If you're, fresh off the boat and you're coming into town saying, hey man, I want to buy 200 units. They're going to ask you, number one, what's your track record? And if you don't have a track record, you can forget about it. So you need to partner with somebody. And then the second thing that he mentioned there that I thought was, genius, asking the broker, what are your goals, and seeing how your goals may align and finding a way to add value there, man. That's awesome. That's really, really good advice.
Yeah. The broker told me, he goes, you know what, Abel, I've never had anybody ask me that question.
Wow. I believe it.
And he's not an inexperienced guy. He's got a lot of success behind him. And I was like, man, you've been doing this for years. No one's ever asked you? Nope.
Look, you done messed up. Everybody's going to start asking now.
Well, the goal is to provide value for the show, man. And I think you'll find out who's the next part is you have to be sincere and genuine about being able to deliver.
That's right.
There you go. But there's my nugget. Hopefully you've learned a little.
Yeah. No, that's great, man. So you just looking back, what was your biggest challenge? You was doing single family, and then you said the mindset shift came, and you said, all right, multifamily is where I want to be at. This is going to help me achieve my goals faster. What was the biggest challenge that you can remember?
One of my biggest ones, I had a breakthrough. It was kind of funny at a real estate seminar conference, right? It was multifamily. And I laugh about it now, but at the time I literally had some tears rolling down my face. Like I had a breakthrough, literal breakthrough moment. And that moment for me was around raising capital.
Yeah.
And it was that kind of that feeling, that uneasiness, that worry, that anxiousness, whatever you want to call it. I had about raising millions of dollars from other people.
Yeah.
A lot of people, my friends, my family, coworkers, people that trusted me and trust me, have trust me for years.
Yeah.
And it was like, man, I want to go do more. I want to go do bigger.
Yep.
I want to do more often, but that means I'm going to have to raise another $2 million or another $3 million.
Yep.
And really the majority of my network is not crazy crazy multimillionaires. There's more than a few multimillionaires, but probably I don't know any of them, or at least that have told me, that are like hundreds or 200s or 300s of $1 million. Right. 1, 2, 3, 4 is kind of like probably where I live in. Right.
Yeah.
And there's a lot of investors that grew up with me that have known me and worked with me for like 20 years. Mm-hmm. I helped them succeed in the sales world and professional world and leadership world. So anyways, they're like, I got $50,000 and this is, I want to invest it. I have a couple hundred, but I'm comfortable with putting 25% of my life savings.
Right.
And I just kind of came to that moment where, I was like, well, really, if someone trusts me with a good portion of their life savings, then I have to realize that, my financial stewardship, my, what I want to provide, the value, better be on point, number one, which I always have intention of doing that. Right. But number two, I have to be confident in myself because they're trusting me to be the expert.
Yep.
And I had that, moment of doubt where I'm like, oh, you're not really the expert. And, that overcoming that feeling was, just really recalling the cycles that I've been through. I've joined 4 to 5 different multifamily programs. I've had my 200 plus hours of like real estate seminars, conferences, where I'm at the table with the books, writing down, taking my notes.
Yep.
I've listened to, I don't know how many of these, countless podcasts.
Yep.
I've done the investing myself where my life saving, not a quarter of it, not a half of it, but all of my life savings
are
in real estate, and my wife's as well. and a good, 75% of it is in commercial multifamily.
Yeah.
I'm like, well, I did all those things, and I am I'm a child of the King, right? So we're talking about faith again, and I know He doesn't have plans, to harm me, but plans to prosper me. And if I'm working for Him, not of man, then I'm like, man, I am working for Him. If I keep Him first,
right,
then I'm gonna make mistakes. I'm gonna have issues. I'm gonna have problems. I'm gonna have obstacles. But we're always gonna come back around to having grit and determination and work, and we're gonna make sure that their money grows and it, flourishes, and we're going to have one of those cup overflowing moments. So it was like, that was one of my biggest obstacles. Like, dang, I'm really going to have to raise capital and keep doing this. And then people are going to trust me. And what happens if I lose their money?
Right.
And, all those doubts come in, but then you realize, like, no, you're not being risky. You've actually been very conservative. You've done a lot of education, and you have the best intentions, moving in. We're not flawless. We're not perfect, but damn, we're going to work really freaking hard to make sure everybody earns, what we're promising. And so that was probably one of my biggest things to kind of overcome.
Yeah. Yeah. No, I imagine that's a lot of people, even myself. I haven't done a deal yet, but I've been looking at a lot of opportunities, and I'm really close to doing a deal. But even myself, man, just, the thought of getting a $50,000 check, $100,000 check from someone, and you being the steward of their money, that's a lot of responsibility on somebody. And, like you said, though, it comes back to the confidence of all the countless hours that you've put into it, man. Like this, I know myself, and I know you, man, you put in a ton of hours, just learning this content, man, knowing it like the back of your hand. So now, if you look at a deal, you know whether or not it's a good deal or not. I don't care who putting it in front of you, what kind of numbers they try to fudge on it. You know if it's a good deal or not. And that only comes from putting the time in, so, hats off to that, man. So let's talk about underwriting. That's the natural progression. When you're underwriting a deal, what are the red flags that you look for to say, hey, this is not really a great deal?
Yeah. I don't say like red flags, but I do want to hear a story to any trends. Usually what I'll see is this trend of, super high expenses and then a reduction of, or vice versa, lower expenses and then a spike up, right?
Yep.
I want to see those trends in operating income, in the expenses and the property management, and the loss to lease, or just any one of the line items. If you're new to multifamily investing, the underwriting side, you'll see there's all these line items in a profit and loss, and you're scanning them from kind of left to right. And I'm looking for the abnormal spikes or the abnormal reduction in either of the income or the expenses. And I'm trying to deduce, be the investigator, whatever, of like, how in the world did this happen? And the trailing 90 days or 6 months, I'm hoping for as long as possible to have these really great numbers. 6 months better. But a lot of times, we get them stabilized in 90 days, right? That's when a lot of times they get refinanced. And if somebody's thinking about refinancing to like, now it's stabilized 90% occupation for 90 days, then you take that and you might take it to market as well. So that's when you kind of see this. Well, I want to know where that came from. And those are the red flags. Or that's kind of what I'm trying to understand, how these numbers spiked in the last 90 days. And if the story is like very reasonable, logical, then it's going to make sense. It's no longer going to be a red flag, but it's going to be, a green check mark that says move forward. And, my income is now higher. Why? Why did it trend up? Well, for the last 6 months, they just improved and spent $1 million in renovation, $5,000 a door across these 20 doors. Yeah. And, then this money gets spent. There's $100K here, $100K there. And you're like, oh, okay, great. I can literally see it.
Yeah.
And they show me, there's 20 of these units that have now been, renovated, and here's a picture, here's what they look like.
Right.
And, that's why the income has spiked. Now that's a very logical, I guess, equation to that underwriting where you say, hey, there's some value here. And by the way, there's 50 more that they haven't done, but they've just proved out that you can get $150 rent bump from these 20 units by doing this $5,000 investment. So now I'm looking at those 50 and saying, oh shoot, let me write those 50 units in with this increase. Right. If I'm the one that invests more in that capital improvement. So the red flag of the opposite would be like, oh, that increase without any proof behind it, without anything being done. I'm like, yeah, that's kind of like what's going on here. Right. And what's the story? And, I'm sure, experienced people that have been doing this for 20, 30 years, might take that red flag as the very reason that they want to move forward. Sometimes I'm like, man, look at this red flag everywhere. Red flag here, red flag there, county there. These guys don't know what they're doing, and they're trying to cook some books or whatever, but let's offer what we should and we can turn around this property. So, it's always, you got to think about it from both perspectives. And that's kind of how I try to be that investigator during the underwriting. And, I'm learning with every cycle.
Yeah, no, those are all great points, and that 90 for 90 is very important, especially if you're trying to get an agency or agency that own a property, right? So that's going to be important. And I guess one other thing to kind of look for, just for the listeners, as you're underwriting this, because the trends are very important, and especially with the occupancy, seeing that going up, just make sure that their guidelines haven't changed on how they screen tenants. They may just be kind of lightening up on their standards so they can, get the place full. So that's something else to pay attention to. And as you're doing your due diligence on these things, or just looking at them in general, just make sure that hasn't changed, because that's a critical point.
Yeah. And that due diligence that you're mentioning, Will, is like, for those listeners, that's inside the office, looking at the rent rolls, matching them up to the leases, looking at their credit scores, criminal background and checks. And I got a new paradigm or a new insight that I just got from an asset manager that's a partner on one of our new deals. Yeah. And she looked at this thing and she goes, oh, the property manager was kind of not very strong, because she was complaining. We were doing the interview before her potentially exit or replace her, right?
Right.
And he goes, not very strong, because she kept complaining that the owner didn't give her any money to make the proper improvements. Mm-hmm. And I said, yeah, that makes a lot of sense. And she's complaining that's why she couldn't do well, in her property. But she goes, when I look through the rent rolls and the tenants, their leasing packages, there was like leases on this section of the office. Then there was like credit checks over here. Yeah. Then there was like background checks, and none of the paperwork was organized. Yeah. And she goes, that to me, red flag for that property manager. It doesn't cost any money to get your paperwork and your books and all that stuff organized. Yeah. And she goes, because I like to start with the end in mind. If our goal is to buy it and then sell it, we want to make it easy as possible for a new buyer to look through and due diligence on our property to see our, improvements. And she was like literally describing, every single folder, I've got my renter information, my lease, my background check, my this, my that. And so they can literally match up to the books when they're doing due diligence. And so she was starting with the end in mind to make it a great sale. And I thought I'd share that right now, because that's, one of those red flags that we're looking for. As property manager is not the right one, but there's maybe a gold standard on the other side.
Absolutely. No, that's a really good point. All right, man, let's go ahead and segue to the deep dive section of the show. Let's talk about a deal that you did, recently. How many units was it? What was the value add? What kind of debt did you put on it, and what's the exit strategy?
Yeah. We'll use like the first one that I jumped into was a co-sponsor, right? So jumped in on another deal. It was 120 plus units here in San Antonio, Texas.
Yep.
And the property was actually pretty well stabilized. I think I remember it being in the 90%. But it was in a class, I would call it a B neighborhood and a class C-ish property.
Yep.
A good neighborhood, strong high school right across the way, busy, I guess what's the street is like, had a lot of traffic on it, whatever the road traffic to retail and restaurants and things like that. And it's a good area of town. And so this property was probably like late 70s, had some brick, good foundation around the outside, but just, needed a little love on the exterior. Right. And, under market rents. So we looked at this property and said, hey man, this has a great value add potential. And this is, my lead sponsor giving me the insights and say, hey, if we invest, $500,000 plus in renovations, we'll do the new signage, do the exterior, do the landscaping, make sure the pool is nice, the exterior, the furniture, things like that. And then, make it look nice from the outside. It'll be more inviting. We'll put, simple things like signs to the office, which you when you drove into the apartment complex, you couldn't tell where to go. Right. So anyways, those things from the exterior. And then the interior was, man, that just super basic, but very valuable. New floor, two-tone paint, resurface the countertops, all new fixtures, make everything shiny. It's supposed to shine. And then, take care of a couple of appliances here and there, if we need to throughout it. And so take those classic units and make them fresh, make them nice, make them clean, comfortable. And we're, raising the rents by $125, $150 per unit. And so that play, really does drive a good amount of value. I like to, let me do the math on it. And you always like to see, I think this, is really helpful for a lot of people that are new, or they're like, how do we create value in a property? I don't understand how that you're going to sell it for X amount and give me a percentage return. Well, in this property, let's just say it's $120 and we increase the rents by 150. That's 18 grand a month. Multiply that by 12 months, and that's $216,000 of net operating income for this example. And if I'm dividing it by a 5.5 cap rate, in San Antonio, it's 3.9 million. If I divide it by a 6 cap rate, it's 3.6 million. So cap rate has a big factor, but either way, that's how you're creating that value, or trying to figure out how much net operating income can I create at the current cap rate. That's going to be the property value. And if you're creating just $150 net positive effect, and some of that could be decreased expenses, taking care of the utilities, a leak, the pool had, some other things, or you can increase the interior units. And that is now 18 grand a month times 12 months, 200 plus grand, divided by the cap rate, and that you get your value. And that's, essentially like, we're trying to improve that property, and all of our investors get a really good lucrative return. And then we do a cost segregation study on it when we purchase it, and get some really great tax benefits for most investors. So hopefully that helps.
No, that's really good, man. That's sound like you guys got a fantastic opportunity there, man, that you guys took down, and like you're going to have a strong exit on it when you do. So that's fantastic, man. Appreciate you sharing that.
Yeah, absolutely.
Yeah. So last segment of the show, man, lightning round. I got 6 questions for you.
6 questions. I'm ready.
Here we go. What's the best advice you ever been given?
Man, the best advice is follow through and deliver. It was my uncle that he was the one that told me, because I was quitting school at the time when I was younger. Quitting college, and I was making good money in my sales career, and I was probably like 19, and I made my first 50 grand in sales.
Wow. And
he goes, hey, I know you're going to make some more money, and that's good, but you're quitting, school, and you're not going to get your degree. He goes, man, look, it doesn't matter if you get a degree in tiddlywinks. He goes, the point is they want to know that you can follow through and deliver on what you set out to do.
Right.
And whether it's school, a promise, a commitment, new relationship, man, if you're if you're following through and delivering on the promise that you made, whether it's to yourself, like that was a promise to myself.
Yeah.
That I was not about to deliver through. And that would have been the worst thing. Cause you never want to break promises to anybody, most importantly yourself. So that's probably the best advice, that I can come up with right now.
Yeah. Yeah. Awesome. No, that's great advice. What's the best book you've read?
Well, in the area of books, it's going to be the Bible every time. Yep. But let's talk about the non-Christian, non-faith book. It's probably got to be Dale Carnegie's How to Win Friends and Influence People. Really, I think that is an amazing book. So the Bible and that one. Yeah.
Good. What are some rituals that you have created that's making you a better investor or person in general?
I took to heart, meditation, prayer. I read this book that's really good, The 5 Minute or The Miracle Morning, by Hal Elrod. And, I'm not on point every single day. I wish I was, but when I get there, when I'm in the morning, I'm like, man, meditation, prayer, putting my goals, out there, writing it down, doing a little bit of journaling. And that's really helped me create a really tight focus on what I want to accomplish, like today, this month, this year, in my life. And it all very much sinks because your day, this is all we have. Your present is all that you have. So, make good use of today, every minute.
100%. What is one thing you're doing right now to help you improve your business?
I'm actually starting to make more phone calls. So, I think it's, I get lost in trying to create like social marketing, content. And that's been really helpful this year. Right. Like, I have people that are contacting me. Hey, I saw this post. I'm interested in learning more. And that's great. And now I'm like, well, shoot, I had all these years, 20 plus years of like outbound calls. I should probably pick up the phone a bit more and just say hello. So that's been really helpful in the last, 3 months-ish for me right now.
Yeah. Yeah. Awesome. If you can give your younger self one tip in regards to investing, what would that be?
Man, it's without a doubt, go bigger, go bigger. Do not be afraid. You're going to fail. It's okay. Just keep moving forward, keep learning, and try to take the throttle off of that little mind that you have. Just remove figure out a way to, remove that limiting belief, have faith, go bigger. You can absolutely do this. And that would be the advice to my younger self. Shake that guy.
Right. Yeah. All right. Last question for you. What's the worst job you ever had?
Wow. I was talking about this with my wife. So in between jobs one time, I absolutely needed to eat. Like I had to, figure out a way to put some money in my bank account. And I had this job where I was working at it was like a temp agency type of thing.
Yeah.
So they sent me to a myriad of like multiple different bad jobs.
Yeah.
One of them was I was working the Alamo Dome here in San Antonio. Mm-hmm. So after the big event, we'd show up and we'd have to pick up the stands of all the nacho cheese, the freaking beer, the Cokes, the sodas, in between the aisles, all the trash that I never kind of thought about, that's just there. Like we're literally with our hands picking that stuff up, putting it in the trash. And, I came home like smelling like that, like, Coke, beer, nacho cheese, hot wings, sauce, like it's just, and it's someone else's food, like that's the last thing that I wanted to do. At that same job, cause it was a temp agency, they sent me to like multiple jobs.
Yeah.
I had to work in a freezer and they were like, wear warm clothes. You're going to be in a freezer all day. And I'm like, wear the warmest clothes that I have. But we were taking whole watermelons that came in a big pallet type of box thing. and they take them with the crane, put, or the little, whatever it is, they put it down, and we have to like take the watermelon out that came from, the dirt. So it's really dirty, literally. And we put them in the vats of water. They have, like when you're washing dishes, like soapy, less soapy, watery. So we're like digging those things down, and your whole entire, like half of my body, my arms and all the chest and everything was wet all day. In the freezer. And we're lugging around these like 20-pound watermelons, scrubbing them off of, dirt. And it's those things that I remember, like washing the watermelon and then passing them through the windows for somebody else to slice them up so that somebody could have like sliced watermelon. And at those jobs were like what I try to remember and keep me humble when I think, oh, it's so hard today. Oh, it's so hard. I'm like, no, bro, you want to go pick up, trash and wash watermelons again? That was hard. That sucked. And so we had to do it. And I actually met my wife during that time, and I love her because, for many, many reasons, but she goes, don't forget, I was with you when your first job was like washing watermelons. So I go, yeah, baby, I love you. Like, you're ride or die. You're with me.
Right. So, man, that's awesome. Yeah. So, man, we're at the end of the show. Abel, tell my listeners, how can they get in touch with you? What's the best way?
Best way is through my website. If you're watching the video, 5tcre.com. That's 5tcre.com. You can set up a time to meet with me there. You can download our eBook on the Investor's Guide to Financial Freedom. You can reach out directly with me. We do webinars, a couple webinars every other week. I've got those there, and some of my podcasts, like I'll connect this podcast once it's out, and I'll put all that on my website. So 5tcre.com is a great place to go. Thanks.
Awesome, man. We appreciate you coming on the show and just sharing a ton of value to the listeners today.
Yeah, absolutely. Thanks for having us, and look forward to staying connected, brother.
Absolutely.
All right.
Thank you for listening to the Generational Wealth Through Commercial Real Estate podcast, brought to you by Onyx Capital Investments. Onyx Capital Investments works with investors nationwide to invest in income-producing real estate in emerging markets. Connect online at www.onyxcapitalinvestments.com to learn more about what we're doing. If we have added value to your life, please leave us a review.